How successful has China been at shifting away from infrastructure investment to drive growth and towards tech innovation as a long-term driver of growth instead?
I think we have to remember that, China is still at a stage of development where massive infrastructure is still needed. And we think about the previous era of infrastructure investments, most of that is kind of focused on heavy infrastructure, right? So railways, bridges, roads. The kind of infrastructure investments that we are seeing, I would say more recently, has been focused on things like digital infrastructure, soft infrastructure. So it's a different kind of infrastructure investments. I wouldn't say they're entirely shifting away from that. I think we still need quite a lot of that to propel the economy forward if they do want to lift themselves out of from middle income. But you're right, there are areas of, especially on the innovation side, especially on climbing the technological frontiers, those are really the new areas of new growth drivers, if you like. And I think they are successfully doing that through very state-led investments, right? So the government is taking a very proactive step towards really pouring cash into these sectors. And I think we would see that come to fruition, at least in this decade, where that could really drive the economy forward, where some of the more traditional levers of growth, such as construction, housing, would have fallen away. Electric vehicles is something that's very headline grabbing, but we're also looking at the new three industries, right? Which most onshore commentators like to refer to as the battery segments, the battery supply chains, the solar panel supply chains, the renewable energy generation space. So there's a whole spectrum, I think, of industries that coincides with global decarbonization efforts that China is really at the center of, and because global demand is going to be quite resilient for those kind of products, those kind of supply chains, for the next decade or the next 2 decades, China is likely to really benefit, from the tailwinds of that. Now, the problem with that is that comes up, against very likely quite protectionist policies from the West. So navigating that is going to be quite a challenge cyclically, I think, for policymakers.
You've said previously that you're optimistic that China will hit its growth target of 5% this year. Based on the latest data, do you still stand by that?
Well, I think the economy has, there are a lot of headwinds that's been reported, but I think there are also a lot of tailwinds. So if you look at year-to-date performance, external demand has really driven the economy forward. So where domestic demand, where the domestic consumer has not really spent as much as we wanted them to, the external consumer of Chinese goods have actually really propped up the economy. So we are still quite confident that this year the Chinese economy could put in a pretty decent economic performance. The question is, would that come at a cost of a lot more fiscal spending, a lot more government intervention, a lot more government involvement? And of course, if you have a situation where massive stimulus is needed to be poured into the economy, that could come at a cost of higher debt burdens further down the road.